Hello, everyone. This is Sebastian McMahon from IA Financial Group, and I'm back with the weekly economic review for the week ending November 19, 2021. So again, an eventful week in the markets, higher interest rates because of inflationary pressure, so loss on the bond portfolio, TSX lagging, Wall Street making again some new records. We'll dig into that in a second. Oil under pressure, the Canadian dollar under pressure as well. So many things going on. So we had the retail sales both in Canada and the US. We had inflation in Canada. So let's take a look at all of that right now. Okay, so retail sales here, you have a busy chart. You have the US on top and you have Canada on the bottom. So the sticks are the month-over-month growth in retail sales. So as you can see, the sticks are much bigger in the US than in Canada because we have very strong growth in the demand for goods in the US. Remember that prior to COVID, households tended to spend more on services than goods. Now it's flipped because of lockdowns and all of the restrictions, the effects of COVID. But the pressure on the U.S. Labor supply chain, the U.S. not just labor supply chain, but the supply chain of the US is much more dire than in Canada. As you can see here, the red line here is the divergence between the trend that we see in retail sales right now versus what the trend that we had prior to COVID. So now we have retail sales that are 14% above those of above the trend of pre-COVID in the US and only 5.4 in the US. So the stimulus package that we got from Mr. Biden in early 2021, maybe it was one too much. And since then, we see that the US households are spending a whole lot, and this is creating inflationary pressures. And it's one of the main factors why we think inflation will be worse in the US than Canada. It could maybe even last a little bit longer because there's such a pressure on the supply chain for goods in the US. So if we look at the Canadian figures here, so contributions to inflation, so we had 4.7% inflation in the last month in Canada for the month of October, and you had the decomposition here. So the kind of orange section here is transportation. So it's the price of gasoline and the price of cars. New cars, used cars are excluded here while they're included in the US. So there's reasons to believe that this will fade somewhat in 2022. The price of gasoline at some point is going to stabilize and the year-over-year effect will be less and less. So that's going to be a drag on inflation. And the global auto supply chain is starting to reopen again. Toyota, Honda are pointing towards full capacity in December or January. So at some point, it's going to be less hard to get cars, so the price of cars will stabilize. So we should have an effect here. Also, there are some other reasons to think that Canadian inflation will stay below the one in the US. Healthcare costs are rising, but in Canada, of course, since we have the public system, it's much smaller part of the household spending compared to the US where it's a large part. So that's another contribution. And telecoms, I mean, there's some regulation that forces the telecom companies in Canada to lower their prices. And if they don't do that, they will have some sanctions. So this is, again, a drag on Canadian inflation. So all in, we think that, yes, inflationary pressures are here. We're above the Bank of Canada's target band of 1 to 3%, but it should be less important in Canada, the inflationary pressures, and it could even calm down sooner because of the lesser strain on the supply chain. So we'll see. But this week, we had some very bad news in Canada, and which could be contributing to inflation story because we have one dead because of the floods in BC. So very sad situation here. Could be Canada's costliest disaster. And so there's this part, but also if we focus on inflation, well, the Vancouver port has been cut off completely. So more issues for the supply chain. And of course, it's the most important port in Canada because the imports from China go from there. So this is a huge curveball to the inflationary story in Canada. So let's see what kind of impact it has. But on top of the human impact, it could have some inflationary impact. So story very much to follow. So financial markets staying on the theme of inflation. So Mr. Macklem, the Bank of Canada governor, came out with an op-ed early this week saying that Canada is getting closer, but it just closer to raising interest rates, but it just repeated the message that he sent in the last Bank of Canada decision that we would see we could expect the Bank of Canada to start to hike rates when we close the output gap, so when the Canadian economy is running at full capacity, and it could be somewhere in the middle of 2022. So it didn't say anything else, just repeated that. So the Bank of Canada should move ahead of the Fed. We still expect that, but that doesn't mean that it's getting closer like in 2021 or early 2022. It's more of a mid-2022 story. But we like the quote that transitory is not short-lived. So as economists, transitory doesn't mean short-term. It means that it is not permanent. So maybe transitory for longer than we think. Still stay with this vision of the story here. So mid 2022, likely to have rate hikes in Canada. But central banks are looking at the market expectations for inflation and the break-evens. So the inflation expectations that we can deduct from the bond market in Canada over the next 10 years. It's expected that we'll have on average 2.1% inflation, which is pretty much right on target. And in the US, it's 2.7, so it's a bit above the target, but still within the band. So inflation expectations remain well anchored for the long term. So that removed some pressure from central banks to change their tune quicker than one might expect. So we still think the central banks stay the course here. Bank of Canada in the middle of 2022, probably the Fed once in 2022 towards the later part of the year, maybe twice, but more likely once. So this is still the base case scenario here. Finally, Wall Street still making new highs at the close on the Thursday. That was the 66th new all-time highs in 2021 for the stock market. The record of, if I remember correctly, 78 in 1995, you can see it on the chart, is in sight. So if we see central banks saying that they're patient, there's still liquidity being added by the Fed, economic data continue to do well, we could possibly see the market creep in a bit closer even to this record or even beat that record. So it's going to be a very interesting story to follow by the end of the year. So that wraps it up. ia.ca/economy. There were some new videos added to the Economy and Finance 101 section this week. What is a stock? What is a bond? And the emerging markets and emerging economies. So added these 3 videos to the section so you can check them out. You can follow me on social media, on Twitter, and connect on LinkedIn. And if you want a copy, PDF copy of this presentation, I drop them on LinkedIn, so you can just connect with me. Go there, you'll find them every single Friday, even before this thing is published in video, so you can have a sneak peek. So that's it for this week, and I'll be back again next week with another edition of the Weekly Economic Review.